All right. We are super excited to have Ajit Tripathi here. He is the head of institutional business at Aave, the world's leading DeFi liquidity protocol. He has a proven track record of delivering solutions for business development, partnerships, and delivery outcomes for crypto and fintech firms. Well known in the UK and EU fintech ecosystem for thought leadership and advanced analytics, blockchain technology, and digital assets. How are you today, Ajit? Thank you for joining us.
Hi, good afternoon. Thank you for inviting us. It's been a very exciting conference season. I was in Lisbon for the better part of the last 4 weeks. So Solana, there's just so much at Cosmos, Ethereum. There's just so much excitement in all of the different layer one ecosystems. And being a cross chain protocol, we are really excited about all of the progress that's being made across Web3.
I do want to kind of dive into that. You've been a part of this industry since no one wanted to talk about Bitcoin and crypto, and now everyone wants to talk about it. Like, what, in your opinion, was the turning point that from where you sit?
Yeah, yeah. So, back in 2015, I think Blythe Masters and a few other folks were essentially going around Wall Street saying this technology will change everything. And that led to a lot of excitement among banks at the time. So, UBS, Credit Suisse, Goldman, Barclays, all of the folks that I speak to now were really getting excited about the tech, but weren't necessarily willing to interact with the actual substance of the tech, which is the crypto, the tokens, the Web3 aspect of it. So I think it was still a good opportunity to and even back at PwC, I think some of the partners would ask, isn't Bitcoin just something that money launderers use? So you couldn't really have a sensible conversation with anyone in the financial industry about crypto. But there was a lot of interest in blockchain technology, right? So there was just this whole enterprise blockchain. All right, let's just skip the money part of this, but use the tech without any tokens and so on and so forth. So there was a lot of interest, and I think I was involved in a lot of different, some of the biggest projects in the space. We trade Comgo, Nasdaq Link, MEFG Coin. There was a lot of stuff going on in a bit of a sanitized environment. So 5 years later, obviously the picture has completely changed, and all of that has changed. In the last 2 years, if you will, as DeFi has accelerated. PayPal and Square came in and showed some revenue. Revolut. So I think with you can talk to financial institutions all day, but once they see PayPal, Square, and so on, actually Coinbase starting to generate revenue, but it's a completely different story, right? Then some of the conversations are no longer required, and people really want to find the opportunity to create value for their shareholders. So we are in an extremely favorable environment in this industry right now. There is just every single day we get a lot of inbound queries about how DeFi works on LinkedIn, email. Stanley, myself, Nicolo, the rest of the team. We're getting inbound queries from you name it, right? I mean, some of the biggest investment banks, mutual funds, asset managers, hedge funds, family offices, you name it. So it's just an you don't actually have to go out there and talk to anyone. I mean, it's just so much is inbound. The interest in DeFi is incredible. The Aave community has done an extraordinary job of I think building a secure, robust protocol. So we get a lot of queries. I mean, this is it's the opposite of where we were in 2015, right? It's just
Hmm.
an extraordinary moment for what we're building.
It seems like this increased attention has also kind of caught the eye of the government and stuff, and we're hearing a lot more about regulations and stuff. How do you think regulations is going to affect DeFi as we move forward?
Yeah, so I mean, you can't get to 3 trillion and have no attention from policy institutions and governments, and I think some of that is required as well. There are 13,000 plus coins out there, and I think none of us can say with a straight face that all of those are actually innovative or genuinely provide value to consumers or otherwise. So I think there is need for some rule making, some the industry needs to grow. I mean, it cannot be a free for all, right? I think it's unreasonable to expect that the industry will mature and it'll continue to scale to from a small number of users to 7 billion people around the world, and there will be no rules, right? It's just not reasonable. So I think that the challenge is, regulators are not necessarily involved in the innovation part of the ecosystem, right? So the news they're getting is always about Shiba Inu and Dogecoin and all sorts of adverse incidents, if you will, scams and whatnot. They're not really getting the full picture of the innovation that's going on in Web3 and in decentralized social media, in decentralized finance. So I think it's important that people who create rules are actually engaged, and they're coming to the developer conferences. They are in the discords, and they're part of the DAOs where all of the innovation is happening. And it's so one of the things that we invest a lot of time and effort in is education, right? So because someone has to tell the positive stories too, right? I mean, because the traditional financial media, whether it's Financial Times or others, they love to publish negative stories, and that's what a lot of the policy folks are reading. So it's really important that the rest of the industry actually takes a very constructive approach to education, and that's kind of where we're investing an extraordinary amount of time and effort. So and hopefully we can work constructively through industry bodies like the Blockchain Association, DeFi Education Fund, and others to have a much more substantive dialogue. I mean, crypto industry historically also has had a bit of a teenage response to, which is oh, there should be no rules. I mean, we cannot get to 3 trillion or 30 trillion and have no rules, right? I think we just need rules that make sense. We cannot have rules that were created in 1934 or in the 1920s or 40s applied to technology that's completely different. So I think it's time to sort of change the dialogue and have a grown-up conversation, and we are trying to lead that along with some of the other protocols in the space.
I agree. Uh, Ajit, I'm not a DeFi expert, and I assume that most of our viewers are not as well. So, can you explain in some lame terms what that differentiates Aave from the competition on the DeFi segment?
Yeah, so we don't, this industry is so early, we don't think of competition. We think of just creating technology and products that people want to use. But I mean, in terms of what makes Aave what it is, I think it's the community, it's the level of decentralization. I think something I'm very proud of, in of what we've done over the last year or so is how decentralized we have become as a protocol, right? And what does that mean? So that means that so last September, August, Stani and the Aave team gave up control of any keys, and we have never had access, sort of any control of any keys, that like admin keys or so on, since then. All the decisions in the protocol are now made by governance, the Aave token holders, 100 to 200,000 odd token holders around the world, and they are made transparently in an open environment with a lot of discussion and debate. Anyone can actually work for Aave, and all they have to do is contribute. I mean, they can apply for a grant through the Aave grants DAO. All of the any ecosystem growth development is done by the grants DAO now. There is a risk DAO for making risk parameter related asset listing decisions. So all of the aspects of the protocol have been decentralized, and I think that's something I'm truly proud of. Now the question is, how do you do that while sustaining the pace of innovation? And there is place in a decentralized environment for leadership, right? For quality ideas, for setting the tone, for having the right values. So I think that's something Stani and others in the ecosystem have achieved really well. But we have stood. We have been very aggressively decentralizing, and I think that's worked really well for us.
Yeah, and so I do want to take note here. So we have a community here for Markets Pro that was able to kind of chalk up some questions for us to ask you. So I want to dive into those. So if you're a member of Markets Pro, you get some of these perks. You get to ask some of our guests special questions. So one of our members from Markets Pro wants to know, with more and more banks becoming interested in crypto, do you have strategies for integrating institutional liquidity? And what does that look like at Aave?
Yeah, so I mean, one of the things we are looking there is a bigger picture out there, right? So we're looking at something much bigger than that. So we think that what we're building is Web3 infrastructure. So if you look at fintech, right? Fintech has built really nice front ends. They built great user experiences, but they haven't. What fintech hasn't done is change the rails, right? So it's just nice mobile apps on, I mean, on 20-year-old technology and brittle rails, credit card rails, and so on and so forth. So what we're doing is as a DeFi community, we're starting to build the backend of fintech, and the distribution of DeFi will still be done by fintechs and to some extent banks, maybe asset managers. We have got to 15 million users according to consensus and their MetaMask report, but now we have to, I mean, that's a very small fraction of where we need to be with 7 billion people on the planet, 8 billion apparently. So so that distribution needs to come from centralized entities, right? So but we're building the back end, the infrastructure and the rails for that system. Now if somebody wants to connect to Aave directly in a permissionless environment, they can do that. But if users are not able to do that, then we're launching, so Fireblocks are currently working on the Aave Arc proposal, and that will essentially allow fintechs that need a KYC environment to connect to to an Aave pool and build their own products on top of that Arc market, right? So I think that leads to, and then other protocols will come into that ecosystem. Whether it's Maker, potentially Balancer, I mean, who knows, Uniswap, who knows, right? I mean, Nexus, and so on and so forth. And then what innovators in the fintech ecosystem will do is they will take all of these pieces of infrastructure and create products that then they can offer to their customers, right? So the DeFi rails will be distributed by a lot of different centralized and decentralized entities, and I think that's a really exciting view of the future.
Thanks. Could you explain a little bit about the risks involved with Aave and how to interpret the risk rating, maybe in a simple?
Yeah, so I mean, it's still a very young technology, right? So if you look at all of the blockchains, I mean, Ethereum is barely 5 years old. Swift is what, 40 years old. Credit card rails are at least 30, 40 years old. So we are looking at a very young tech, you know, and a lot of practices and behaviors in the DeFi community are still evolving. The tool set has matured a long way, right? I think now we have really good wallets, we have hard hat environments, we have developer apps, dApp tools like Tenderly, and so on and so forth. So things have come a long way from where they were in 2015 and 16, but there is still some technology risk in DeFi protocols, right? So that leads to certain exploits, attacks, and so on and so forth. Now with Aave, what we've done is we have the community has invested quite a lot in audits, right? So there are 5 different audit, some of the leading audit smart contract auditors that are always auditing the protocol on a regular basis. Then there is formal verification in there. Gauntlet have done an extraordinary amount of stress testing. So there is an Aave exists in a very adversarial environment. So if there is a weakness, it will be found, and like an incident 2 weeks ago. So I think we have built something that's now very secure and robust, but at the same time, it's still very young technology, and most of some of the risks are essentially technology related and DeFi across the board.
Okay, Avi, we still have one question from Discord. So again, I'm not an expert on DeFi, but I'm going to read it. So what grant recipient projects are you most excited about in Aave?
Yeah, so we love them all, so I don't want to.
Tough to play favorites.
I would answer a different question that you didn't ask, right? Which is, what would I like to see, and what would we like to see as a team? I think what we would like to see is that is a scenario where let's say, the future iterations of the protocol are done instead of, let's say, 40% by the core team, by the Genesis team, 95% of and eventually everything should be done by community, right? I think that's where we want to get to. So we are seeing some really interesting ideas around, using NFTs in Aave for as collateral. We are seeing some Gelato have done some really good work across, in terms of building bots across different protocols to identify and exploit opportunities for for preventing liquidations. I think we people who are building core Web3 infrastructure, they're starting to enhance the security, the utility, and the user experience of the Aave protocol. And so I'm not going to name any specific projects because that sounds a little bit preferential. But I mean, what I would personally like to see is, when all of the Aave protocol, the future iterations are built by community, and I think then we have really made it.
Definitely. Well, we appreciate you sharing your insights today and joining us on the show, Ajit. This is Ajit Tripathi. He is the head of institutional business at Aave. This was awesome to kind of pick your brain and kind of see what's going on, especially inside of the DeFi ecosystem. Thanks for joining us. We'd love to have you on again.
Thank you so much. It's been a pleasure.